just heard from award-winning realtors about your marketplace. It's one thing to find your dream home. It's another thing to finance it. I've traveled the country to find the best mortgage experts in every city. You're going to hear from yours in a Mortgage Minute right now. Let's check it out.
And now for the Mortgage Minute, we have Andy Tuttle with us. He is the branch manager of the Tuttle Group with Fairway Independent Mortgage. Andy, thank you so much for being back on the show.
Thanks for having me, Jen.
So Andy, my question for you today really pertains to self-employed individuals. How do they get ahead on the home buying process when they are self-employed?
It's a great question, and frankly, one of the things that you can do if you're self-employed, one of the problems you face, I should say, is that you want to write off as much as possible, right? That is legal, to make sure you don't overpay for taxes when you own a business. But when you go to buy a house, we have to go off tax returns when you're self-employed. And so if you're not claiming anything to the IRS, then we're not going to be able to qualify you for the home you want. So what you need to do is get with your CPA, plan a little bit more, a year out at least on filing taxes, sometimes 2 years, depending how long you've been in business. And you want to get with a lender and say, hey, I want to file my taxes. Here's the home price that I want. What do I need to make to qualify for this home? What is the qualification parameters? And once you get that information, you can go and talk to your CPA and make sure you're filing enough to minimize your tax burden, but also claiming enough to qualify for the home that you want.
Are there any pitfalls that we should be careful of?
Well, make sure you're doing it legally, and make sure that you are looking at your overall, as far as pitfalls concerned, when claiming your income, just make sure that you are not waiting until the last minute, and make sure that if you are starting new businesses or have multiple businesses, that those businesses aren't claiming too big of losses, or the CPAs make sure to putting those on the capital loss line so it doesn't look like a recurring expense, because you can add those losses back in.
Sure. Fine line that we have to walk. Andy, thank you so much. Great advice today.
Thank you.